Uh, is you watching the market right now? Kind of see what's going on. Hey, I'm going to rant a little bit and I'm going to share some data with you because I'm genuinely excited about what's happening. And this is the time where other financial advisors don't answer their phone. I know it. I see it. I watch it happen. This is where they disappear for a while. Oh, I'm on summer vacation, whatever, you know? No. This is the time to be there watching. So right now, as you're watching this, we are actually doing our Wine and Wealth class, which is live to clients. So it's completely separate. Obviously, this is recorded. But I wanted to include you guys in on this too, because what a move. Like, what is going on out there, right? So I actually am excited by the markets falling, like I said, because we're already in position for it. And I'm going to show you exactly so that this isn't like, oh, we saw this coming and all of that. I'm transparent and I'll share and answer any question that I know the answer to. Well, I'm not talking about the retirees here because any advisor should have already worked with your retirees to account for the volatility that the market could have like it is having now. And so I'm not talking about them. We spent last year going through the retirees going, here's what we're going to do, get everything set, so you don't have to take excess risk. But I like the fact that the markets are going lower because we actually prepared for it, right? Last year, and I want to try to explain how this works. So like, instead of just saying, we did this, and the markets went lower and we did not fall. I want to explain to you how it works, and I'm going to try to simplify it as much as I can. I know I get some grief for this every now and then, but hang out for a little bit because I'm doing this for everybody rather than making this like a sales pitch. So when you build a portfolio for retirement or for the long term, for whatever it is, you want to figure out how fast is that portfolio going to move relative to the market. And if you're going to move slower than the market, you just want to know that. It's okay, right? Like I have older investors that do not want to keep up with the market or whatever their benchmark is, and that's okay. It's by design. Then we have other investors that are younger and say, go for it, man. Let's get as much growth as possible. Well, look, this is what happened to us last year, and I've done Wine and Wealth classes for clients, so they all know about this. But I find that I often don't talk about it publicly, so I want to share with you because I enjoy this kind of thing. So here, let's pretend that small cap is our focus, the Russell 2000, and it did this sort of thing last year. And we're going to say that you were focused on the Russell 2000. You could switch that out for the S&P, you could switch it out for the NASDAQ, whatever you like. I'm going to say Russell 2000. Well, we have a small cap fund. We build our own funds, and they're made up of all individual positions. And one of them, we honestly just call it the small cap fund, right? And so what we noticed last year was our fund was starting to do better. At the end of the year, we noticed that, and I should have done it like this, right? We noticed that all of a sudden it was kind of tearing away there. Now I have two choices at that point. And as a portfolio manager for all of the accounts here, I have a choice to say, boy, when clients log into their account, they're going to think we're heroes. We're doing better than the benchmark. This is true for all of the aggressive funds. Or I could prepare for the next move in the market. And this is tough because, of course, as a financial advisor, I want to look like I'm doing great, obviously. There's no doubt about it. I'll just tell you. But when the market was going to new highs, October, November, December, I made the Wine and Wealth classes say, hey, guys, look what's happening here. We're moving faster than our benchmark. I went through the funds and I said, we're moving faster. So we have two choices. We can start to take some profits where we start to perform more in line, or we could just ride it out and hope for the best, right? Well, now, we chose this route. And you can actually figure out exactly how much you need to reduce the size of your portfolio, in other words, or in this case, go to cash. You can figure out that exact amount. And what we chose to do was sell, 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 to the point where our portfolio started performing roughly in line. And that meant that we got to take off 32% of our portfolio. I was shocked myself. I'll be honest with you, that's not something I thought was going to happen. I did it in pieces. I sold 2% every time the Russell 2000 made a new high, or at that time. I sold 2% more, another 2%, 3%, 2%. And eventually I said, look, we got all the way down to 32% and we're performing in line. Isn't that kind of a win-win? Like if you could build a portfolio that was actually moving with whatever your benchmark was and still have 32% cash while the stock market's at all-time record highs, I thought that was a no-brainer, right? And now some clients said, I don't give a damn what you're doing over here. I want performance. And so I had to help them, say, look, this is our chance. This kind of thing doesn't happen often. I've been doing this since I was in britches. It doesn't happen that often. I've only thought of one over time that I did it. So we took that approach, and I wanted to point that out because now, I'll just show you the data instead of drawing a pretty picture on the charts there. Because now here's what's happening. Here's the actual, from an actual account. So we'll go to the screen. And here's what we did. So coming out of the summer last year, we started slowing down. As the dark blue is the small cap fund. I blurred out the client's name. And then the light blue in this, this is the large cap fund. So same concept, but this is what we did. I just want to be honest with you. So the market started moving higher and we were scaling out. Notice how the performance starts to suffer. See how all of a sudden we were not participating, right? So for a moment in time, if the market would have gone higher, we would have started lagging. Perfectly honest with you. We started lagging and we would have looked bad. So now that we've gotten into this year, what happened? Well, we all know the markets have fallen. It's a bit rough out there, but where do we stand? We now have between 27 and 32% cash, depending on what fund you look at there. And so what advisor does this? And I'm just saying this now because it's true. What advisor does this? They don't. Most advisors don't actually know about investments, how to move investments, how to manipulate them. And if they do, they don't show you how they do it. And I don't know why. That doesn't make any sense to me. So what I did this week is we do an email. It's called Wine and Wealth, right? Or Notes from Jazz. It's an email that goes out every week. What I did is I said, okay, I could draw this all day long, but I need clients to see it. I want you to understand that as the markets are falling, you are not participating as much for now because we're going to scale into it. In fact, that's what we're talking about this very second in our Wine and Wealth class that's live. Anyways, let me share it with this. So here's the email that I wrote last weekend, and none of this really matters to you probably, but down here, here's the performance. I'll go quickly and then I'll come back. Every one of our funds, I showed the performance. I took the time to put every one of them on there because I wanted clients to see that our adjustments paid off. Not to brag, but to tell them, they paid off. Now look away for a minute because I'm going to start buying the market again at some point. So for example, here, you probably need to see it bigger. We call this our aggressive stock fund. This is from the beginning of the year. Notice how we were not participating. If the market would have went higher, in all honesty, we would have not participated, right? So very helpful for me that the market fell. I was thankful for that. So of course, we're still participating, but we have a cash position. We're not falling as much. How good does that make you feel? Consumer staples happens to be a good area this year for us because a lot of people go look for dividends when the market gets wild, and our consumer staples fund has a lot of dividend paying stocks. So this is a bit of an outlier. It is performing better, but I don't want you to think anything magical is going on there. Everybody's just excited. Same with defensive stocks, actually. So I don't want to stick on that as if there was something magical. Our dividend focus fund, we don't really have a benchmark for that one, but you could see how we have the ability to not participate as much in the market downside. International fund, et cetera, et cetera. You get the idea. This isn't a sales pitch or a bragging moment. This is just to kind of show you that I like to do that. I like to share with clients, hey, you put up with me when I was saying, hey, take 2% off, or we're going to do it for you. Take 2% off, take 2% off. I promise you it's going to work out. I like to show that that was worthwhile. That was worth the time sitting there going, I don't know about this Dustin guy. I'm not sure what he's doing there, but I like showing this. Now, before I go, that is not market timing. I know there will be someone who did not watch to this point and is going to say, great, market timing doesn't work, Dustin, you can't do it. That's not market timing. Market timing would be trying to manipulate positions in a portfolio. That's not what we did, right? Market timing would be to say, I'm out, I'm in, I'm out, I'm in. That's not what we did. We took a portfolio that was moving faster than it needed to be, and we slowed it down, right? There was no timing involved in that at all. We had the luxury of being able to sell little by little and pick our time to sell little by little. But this was a matter of, just like any mutual fund, sometimes they get running a little hot and the mutual fund says, we need to dial this back. Target date fund, for example, could get running a little hot and they got to dial it back. That's not timing, that's portfolio adjustment. In their case, that's what they're doing there. So we actually went through one by one. I say all this because the sales pitch is somebody should be doing this for you, right? Especially if you're older and you're now sitting there going, oh my God, I've lost so much money. All right, well, somebody should be doing it for you. If it's not me or us or whatever, that's totally okay. But you might need help with that. The other thing I wanted to do this for is, this is not the time to sell stuff. The market literally reversed itself. It added $1 trillion yesterday and then lost $1 trillion, at least as of now, it lost $1 trillion. This is not the time to sell. This is the time to take what you have, if you have like 80% invested and 20% in cash, this is the time to do the opposite of what I did last year. Here's 2%, here's 1%, maybe some goes in small cap, large cap, whatever it may be. This is your chance to do that. If you think as a long-term investor, when the markets come down, I will scale in with whatever I have, and when the markets go up, I'm gonna let myself enjoy the ride, but if I start moving too hot, I go too fast, I'm gonna sell off a little bit, and I'll just use that cash at another point. Being able to factor that is so cool to me and something I enjoy so much. That's it. That's all I was here for. I just wanted to kind of do like a emergency meeting here for everybody else, because that's what we're doing in our Wine and Wealth right now. And we're talking about the small cap fund. I'm actually going through and explaining each little thing. I'm not drawing pretty little charts like this on the screen when we talk with clients, because I want them to know. Even if they don't find it interesting, their eyes gloss over, it's there. If they ever want to come back, you can always check it out, of course. Anyways, that's all I have for you. Enjoy the rest of your evening, and thanks for putting up with me here today. And let's see what the market's got for us going forward, huh? At least it's exciting. Gotta give it that. It's not boring.